There was a point last night where Danny was $2,500 down at pool with me, or whatever it was. What was it? 8.2 million sats. What is that?
I don't know. It was a lot.
It's 8.2 million sats in Bitcoin.
I don't know. I can't do that maths.
I think it's about 2.5.
Yeah, something like that.
It's a lot of money.
He kept wanting to double. He was so drunk and he couldn't. He couldn't even queue straight, and he kept.
I can't do that when I'm
bring your
sober.
bike in. He wanted to get double equating. If we'd have kept doing it, he would have ended up about 40 million sats down at one point.
I pulled it back.
Pulled it back. Yeah, some weird odds, man. Anyway, Steve, good to see you, man. How are you?
Good to see you, Pete.
Good to see you. You're in town for the event, right?
Yeah, blockchain. What, North America Blockchain Summit is what they're calling it, right?
We refuse to call it that.
Yeah. What are you calling it?
We call it the North American Bitcoin Summit.
Okay, good.
I told that to Lee the other day.
I mean, we're only talking about Bitcoin at this thing anyway. So why do they call it blockchain? I don't know.
Got to move on from that blockchain thing.
I agree.
Got to move on.
I agree.
Tell Lee every time. But it's a good few people coming to town for this.
There's a lot of people coming.
Yeah.
Yeah. I mean, I kind of came last minute. They asked me to come on some panel, and since it was in Dallas, easy flight.
Yeah.
I'll jump in.
The Bitcoin conference is going to be even easier for you next year.
Yeah, it'll be
Next year? This year?
Next year.
Next year.
It'll be a 20-minute drive.
We're all staying with you, man.
You are, absolutely.
All right. ETFs. What do you know? What can you tell us? Where are we? Is it happening?
I think it's happening. I'm going to say I think because anything could happen. But, there's a lot of speculation on timing. Mm-hmm. And what is today's date? Today is November 15th. And there was massive speculation that between the dates of November 10th and November 17th that the SEC would approve.
Wow.
I'm going to debunk that right now. It's not happening this week.
Danny thought it was happening this week.
Well, I heard that there was I don't know the reason that there was a window, but there was obviously this window that it could be approved. Why is it only specific times that it actually can be approved?
So there's actually a really good reason for that window. First of all, there were public comments that were available on the BlackRock filing up until November 10th or November 9th. I can't remember the date. So usually the SEC would not ever approve something until the public comment period is over. And then November 17th is an important date because there are two applications that are due to a response on November 17th, which is this Friday. If the SEC were to approve something to be launched in January, likely what they would do is approve a 19 before this week and then give all these comments to issuers and say, okay, now you guys get to work over the holidays. We'll come back in January and review everything. So there was a lot of speculation around that, and I'm one of the people that thought there was a good chance. But the reality is the SEC will move on their timing, not on ours, or not what we're speculating, or not because of some false window. And I do believe that they're moving fast, but they're also moving thoughtfully. So they want to make sure that markets, that there's no issue with capital markets, that there's no issues with disclosures, and we're actively working through disclosures.
So do you still have an active application?
Yes.
And does that limit what you can talk about here?
It does limit what I'll talk about. And if I can't talk about something, I'll just say it.
Okay, let me tell you my observations and tell me what you think. So one thing that stood out for us, it feels like this is one of the most hotly anticipated ETFs.
Right.
There's a lot of interest around it. There's been a lot of applications. I don't know if there's any other, you might know if there's any other type of ETF in the past that has been rejected so much, that has had so much scrutiny. I'm assuming there isn't.
Not as much as this.
Yeah.
I've worked on other ETFs in the past where it took a very long time to get it over the line, but not this long.
Right.
Not 10 years.
So one of the things that then stands out to me is, I don't know how many there are. Say there's, 13, 12, whatever. There's a lot of applications out there. If you were first, you have a huge advantage.
Absolutely.
I'm not sure if the SEC wants to pick a winner. So my limited understanding and observations are, it seems like they're trying to line everyone up to approve them all at the same time. That's what it feels like.
Yeah, I would say it feels like that as well, and I think that that's probably the fair route to go. As we saw during Bitcoin futures, that was a bit of a race, and the one that went first had a huge advantage. We were second. We also had a big advantage over everybody else, and then everybody else really got nothing into their ETF. And then it seemed like for this ETH futures ETF launch about a month ago, they lined everybody up because I think they wanted that as an experiment to see what would happen. Now it was a bit rough, and there wasn't a lot of interest in ETH.
Right. Okay. Interesting. And that's why it was rough, because there wasn't a lot of interest, or separately?
I think it was two different. I think it was rough because of that, and it was rough because everybody was trying to go at once, and there wasn't a lot of interest with everybody going at once either.
Why do you think there was a lack of interest?
I just don't see institutional investors and registered investment advisors that are buying on behalf of clients caring about ETH as much. It's more of a retail type product. Second of all, I know this is a Bitcoin show, but we're going to talk about ETH. If I wanted to buy ETH, I would go and buy it on some exchange, stake my ETH, and earn 5%. I'm not going to buy it in an ETF and pay somebody to own it. It's counterintuitive.
Yeah.
And if most of the investors are retail, they're savvy enough, at least partially savvy enough, to know that, hey, I can at least earn 5% on my own. I don't need it in an ETF. It's kind of crazy. And really, we haven't seen a whole lot of interest from institutions and Ether. And the main reason I believe that is there's been a lot of education out there over the last 5 years. So people actually, they kind of know what they're doing. So you've got Bitcoin, which stands alone. Bitcoin is a currency, right? And there's some other competing currencies that I think are just fine, Litecoin, whatever. And then Ethereum is a protocol. It's a completely different thing. And if you look at that up against, thousands of other protocols out there, it's like, okay, which one do you choose? If I'm an investor, I'm looking at ETH, I'm like, well, if that's what I'm trying to invest in, then I'm going to buy the thing that's newer, hotter, faster, cheaper, right? Sort of like technology. So, I've always said Ethereum's kind of a thing of the past anyway. It's old tech for what it is. If that's what you want to invest in, there's better tech out there. And I think institutional investors understand that as well.
Is there a pent-up demand for the Bitcoin ETF then? Are you seeing interest?
Yeah, I'm seeing a lot of interest. But I don't think it's going to be day one. Right. A lot of people are like, oh, day one is going to raise $20 billion. Like, no, I think day one we get $1 to $5 billion, but we build up to $20 to $40 billion in inflows. I'm talking about across the board over the next year or two after it launches. So
that's a considerable amount of demand.
Yeah, that's right.
And there will be additional demand from people front running it, wanting to buy Bitcoin, the asset themselves anyway.
Yeah.
So even if it's 40 billion of inflow, there'll be additional inflow because of that. Pre-inflow and then post-inflow on the FOMO.
That's right.
Okay, so that was my first observation, that it seems like they want to line things up, and it seems like kind of a fair way. I mean, obviously, if they weren't, you would want to be the first.
Well,
and I'm guessing no one wants BlackRock to be the first, because they'd own the whole market.
Frankly, there's a few ways to slice it, right? Yeah. Of course, we want to be first. Do we deserve to be first? No. And I'll tell you why.
Yeah.
If I were to look back and look at the whole thing fairly and say, okay, if I had to pick a winner, who would I choose? I would actually choose Van Eck. So if you look at all the applications that are in, Van Eck filed the first application of this whole group of everybody that's active right now in December of 2020. So they deserve to be first if there was a pecking order. We filed in the beginning of January 2021. We would deserve to be second, and just kind of go down the list. And that would be a fair way to do it. Or the fact that everybody files 19B4s, it's you batch them out, right? So like you choose like the first 8 or 10, and you batch them all together. And I think that's what the direction they're going to go in. And then you probably batch out the ones that kind of came in late over the last 6 months, and then Grayscale last.
Yeah. Would you rather be second or in a batch?
I would rather be second than a batch, but I don't see that happening.
No. It would be kind of funny if they batched everyone apart from Grayscale.
That'd be hilarious.
Yeah. Okay, so that's my kind of first observation. My second observation is that it felt like to me consistently that they were just finding any reason to not approve one and never wanted to really. And that since the Grayscale lawsuit, it feels to me now like there's an acceptance that they're going to do it. There's been a kind of shift.
Right.
Reading between the lines, like, okay, it's coming. Mm-hmm. Did the lawsuit shift it? Do you believe that changed it?
I don't think it was the major factor.
Okay.
But I do think it was a factor. I actually think the major factor was this. If you look at what happened over the last year, BlackRock got involved. And what BlackRock did was really unique. They started working with a couple of different folks to think about all the different things that you would need from an institutional perspective to get an ETF launched. Like, okay, let's read the letter, the Dahlia Bloss letter of all the things that you've got to overcome. Well, the first thing that BlackRock did was hire Dahlia Bloss from the SEC. The second thing they did was address all of the concerns that she wrote about when she was at the SEC.
Kind of smart.
Pretty smart. I wish we had thought about that. And so once they legitimately addressed all the concerns and worked with others to make sure that those concerns were adequately addressed, I think it opened up it completely opened up the door for the SEC to have no further comments, no further objections.
So there feels this inevitability about it. I'm therefore surprised the price hasn't even run higher.
Well, if you think about it, we've doubled in the last year. Okay, I mean that's a lot, and there's been a lot of activity, despite the fact that we're still in a bear market from two perspectives. From the Bitcoin economic cycle, which is it's always been a real cycle. It's always mattered. It's 4 years, and we're not really at the point to where we should be running as much as we are in that cycle.
Yeah, we're about a year out.
Yeah, we're about a year out, maybe 9 months. Yeah, next August.
By the way, this time around, we listen to you. Everything you say, I'm listening to.
So you have that, but you also have the macro cycle, which is off as well. We were technically in a recession. I think we're going into a full felt recession. Inflation's still high, despite what CPI data says. I believe that the Fed is going to have to, for various reasons, start lowering rates May 1 of next year. Mm-hmm. And despite the fact that real inflation is high, they're going to point to CPI data. They're going to point to components of CPI and say, well, see, look, we're fighting inflation. We need to lower rates. But it's really because the underlying economy is suffering.
Why did you pick May 1st as a date?
Well, May 1st is, in my opinion, it lines up with the election cycle as well. So the Fed's not supposed to be political, but they are. And we have a presidential election in the U.S. On November 5th of next year. So to get ahead of that election cycle, we would likely have a narrative that comes out that, hey, we've beaten inflation. Hey, the economy's strong. We're going to start lowering rates because we beat inflation, and lowering our rates will actually help the economy become stronger, at least in the eyes of what the stock market's doing, what risk assets are doing. So I think anything before that is too early to have that economic effect before the election. But on May 1, I believe that we see a 25 basis point reduction in the Fed rate. We see another 25 basis points in June, and then in July and September, which are the next two Fed meetings, we probably see full 50 basis point reductions. And then the elections on November 5th. November 7th is the next Fed meeting, and we probably get another 25 basis points after the election just to boost the economy, to show, hey, look, the results were great. country's happy.
Do those reductions themselves structurally make a big difference, or is it more a signal?
It's both.
Okay.
So it is a signal. People will start spending money and investing more when they see reduction in rates, but also it creates the opportunity to spend more money, right? Debt is cheaper, therefore you can borrow at a better rate to actually make investments.
Yeah, it's funny as well, because I always wondered how much of a difference it actually makes. But now, actually, as somebody who operates businesses and looking at debt for various things I want to do, it's expensive to borrow right now.
Yeah.
Like the rates are high.
Well, think about a home. I mean, this is something everybody deals with, right? So in the US, we had rates under 3% for a very long time. Okay, so let's say that you have $1 million home that you're buying, and I'm just using that as a round number, right? $1 million home at 3% cost you about $2 million over 30 years because of the interest that you're paying on it. So if you were to get rates to 8%, which is about where it is right now, it actually doubles the lifetime cost of the home. And when you think about it like that, it's like, okay, a home costs twice as much because rates went from 3% to 8%.
I got my mortgage just before the rate started to change at 2%.
Yeah.
Got a year and a half to go.
Yeah. I'm at 285.
Yeah. I heard a really interesting thesis that the Bitcoin cycle is aligns perfectly with the political cycle.
I've never heard that, but it is interesting.
Yeah, that's what I heard. And I think it's strange because historically it should be a bull run 2025. Mm-hmm. But next year we have potentially halving, election cycle, ETF all coming together in 1 year. I mean, I don't know about you. I'm feeling like it's going to be a big year.
Yeah, I think it's going to be a massive year. So speaking of price, we have gone a long ways in a year, even though we've been feeling the a lot of harm from a bear market that was coupled with a lot of fraud and bankruptcies and just a lot of structural issues in the market. We've doubled in price from about a year ago to now, which is fantastic. I do believe, though, outside of this catalyst of a Bitcoin ETF, changing anything, we're probably back. If you look at every 4-year cycle, around Thanksgiving through the end of the year, we just sort of die down a little bit. Price goes lower, and I think that's going to be the case this year as well. And probably get some nice little pop in January, February, and kind of crab along for about 6 months. And then when we get our first rate hike in May, I see Bitcoin really popping. And then through August, we probably double again. And I see us going to 100,000 by the end of next year. Easy. And that's not even, let's just ignoring Bitcoin spot ETF. That is a complete game changer.
Historically, when you give us these predictions, you're almost always entirely right.
I'm pretty sure you gave us the day of the top last time.
Yeah, you gave us the top, and we were like, yeah, shut up, Steve.
2021, yeah.
Yeah.
It was October, wasn't it?
It was whenever your futures ETF launched.
Yeah. Steve told us, we're like, yeah, no, Steve's wrong. What was he on about? And then boom, you're totally correct. I was like, damn it. I should listen to Steve.
Well, I'm a behavioral economist by education, and all I do is look at patterns.
You should start a trading group. I would subscribe.
I do trade.
No, do it like a WhatsApp group.
A Telegram group.
Oh, yeah, no way, never.
When they start cutting rates, how far do you think they'll go?
I think it's possible to get, my baseline is about 250 basis points. So
you don't think we'll go back to like zero interest rate policy?
No. I think so. So right now we're at about, it's a range of 5.25 to 5.5. I see us eventually getting down to about 2.5 to 3.
Right. Why don't you think they'll go to zero again?
I think the Fed has learned its lesson that zero rates are bad because things like this happens, inflation.
And there's then no wiggle room for them when things happen.
Yeah, that's right.
Right.
And there's nowhere to go. And we were saying that for a long time when rates went below 2%. So look, I think 2.5 is the bottom. I don't see us going to zero again.
And in over what kind of time frame?
So very specific. I believe, and look, things can change, right? This is based on the information I have now, and what I see happening now. We get a 25 basis point cut in May, 25 in June, 50 in July, 50 in September, and then another 25 in November, 25 in December, and maybe a couple more the following year.
So it's going to go almost as far down as you think it will go in the next year.
Yeah.
Wow.
Yeah. Oh, thank you.
Can you bring up that James Lavish tweet?
Yeah.
Sometimes it takes me a long time to understand the things, but some things are starting to really make sense in terms of how this is one big giant Ponzi. And how this kind of yo-yoing is going to play out. Shout out to James Lavish. Higher UST rates, so that's treasury rates, creates larger deficits, leads to more debt. Then long duration yield spike in even larger deficits, eventually a debt tsunami.
Yeah.
So there's an inevitability around this.
Yeah. I mean, so what's really interesting is people in the US always complain that, my tax dollars fund that. Well, actually they don't. But your tax dollars fund nothing. Your tax dollars barely fund the service to the debt that we issue in the US. We print money and issue debt to pay for things. And what happens is as interest rates go up and we have a large amount of debt on our balance sheet and a large amount of debt issued, it becomes harder and harder for us to service that debt. And there's only two ways to do it: raise taxes or issue more debt to service the debt. That creates a problem. So we're at a point to where we have so much debt outstanding and interest rates have gone up to over 5% that the only way to solve the problem is to start lowering rates again. Otherwise, people aren't going to buy our debt. People aren't going to trust our currency. So we have to lower rates despite what inflation does. Doesn't matter.
Why would people not buy the debt? Because if you assume that it's like risk-free, then they're making more money.
Well, for the longest time, the US dollar has had no competitor, but now we have a competitor in China. So the renminbi is a major competitor. There's a digital renminbi. China's investing heavily in commodity-rich nations and trying to force a lot of commodity-rich nations to use the renminbi. So now there's competition on the global stage to the dollar, and so we have to do things that are competitive in order to keep dominance. And before, there was no reason to do anything competitive at all. Now we have to say, okay, well, we've got to figure out our debt issue. We've got to figure out our money printing issue, and we've got to figure out our inflation issue. And those things don't always coincide. Really, the only way to solve all the problems is to begin massively cutting government spending.
Austerity they tried in the UK, and they really struggled to make any difference, any inroads.
Yeah.
As I believe it, the federal government is about running at double its receipts.
Yeah.
I think So one of the realizations I had, which is going to sound really obvious to you when I say this realization, you're going to, of course, Pete, you fucking idiot. But I used to look at the debt clock and think, okay, there's 33 trillion in there. It can kind of just keep going up, whatever. Like, obviously, they can just keep increasing the debt. It doesn't really seem to matter. But what I'd never made the link was this debt matures and has to be paid off. And then I was like, okay, now when I take out a loan for a house or a car, I have a job. And so I borrow a rate I can afford to make the payments and still have cash to like live and go down the pub and go on holiday, right? And I realized when the government's borrowing, they're borrowing it. It's like me taking out a mortgage where I've got to pay 10 grand a mortgage a month when I earn £5,000 a month. Mm-hmm. And I realized, like, hold on a second. The only way I could do that is if I could just take out more loans to pay off the previous ones.
Right.
And so then I realized, well, hold on a second. This is why it was 700 billion or 900 billion they borrowed in 2008. And then they're doing that like every month now, whatever it is. And so this kind of like this realization is the only thing they can do is continue to print. There's zero option. There's no choice.
Yeah.
Which therefore I'm like, okay, so that does mean we're going to go into this cycle where we're going to have high inflation, then higher interest rates, then lower interest, then a print, and then higher. It's like this cycle is going to happen until something completely breaks.
That's right.
Or is it already broken?
Well, it's already broken.
Right.
And now we're just trying to sweep it under the rug. But that's the problem. I mean, you and I are reasonable people that have kids that want to pass on positive assets to our kids one day.
Yeah.
So we own homes or other assets, and we pay our debt, every month for 30 years or whatever your mortgage period is. And by the end of it, you've paid everything off and you're done. You retire and you're living in a home that you paid for, and you can pass it on, and your next generation gets a piece of that. That's fantastic. But the incentives are not aligned with our government based on election cycles and based on how things work. So for whether it's the president or whether it's a governor of a state, you get elected for 4 years, and your job for the next 4 years is to get elected again. Okay. So you're going to spend as much money as possible to make everybody happy so that you get reelected. And then your next 4 years is to make sure that your vice president or your party wins the next 4 years. And if they don't, who cares? You're passing on the problems to the other political party, which typically is the cycle of what happens. So, so there's no incentive to solve problems. There's only incentives to essentially pay voters for a 4 year and an 8 year cycle.
So that says to me that there's a gap in your constitution.
Oh, absolutely. I mean, we should have a balanced budget amendment in the Constitution. A few presidents had pushed for that, but Congress doesn't like that because they're sitting in their chairs forever. And they want to continue to create bills that spend money to, make sure that they get reelected over and over and over again.
But it's a system. The incentives are broken. I mean, we talked about this before. We have similar problems in the UK. The numbers aren't as big. I would like it that if a government cannot balance their budget and has to borrow, it goes to a referendum.
That's right.
Just that one rule, or it's a re-election. Do you want to approve this? Can we? Because we as the people, we're paying for this.
Right.
Why aren't we approving it?
Yeah.
And I think that's one of the major issues is this gap in knowledge between what the politicians say and do and us as people. Yeah, even to the point where our prime minister is saying he's bringing down inflation. I was thinking, no, you're not. The Bank of England's bringing down inflation.
Right. Every day I go to the store, it costs more money to buy the food I eat. Yeah.
But I don't think people truly understand. There's not enough knowledge in the electorate.
That's right.
And it's a problem. It's such a huge fucking problem. But yeah, so I had this kind of like realization this morning, something which I've probably been told 100 times on this podcast, and it never really clicked. And then it did click because I read this article about, what was it, $7.6 trillion of maturing debt. I was like, oh yeah, you actually do have to pay this off.
Yeah.
And you don't have 7.6 trillion to pay this off. Yeah. What happened with this kind of disastrous bond sale?
Well, so this is what happens when there's no demand for bonds. I used to be a portfolio manager for bond portfolios, institutional bond portfolios, and I was a bond trader. And what happens is there's an auction every time the government issues more debt. And if your accounts are all full and you already have everything you need as far as treasuries go, and even high value corporate debt, you're just like, hey, no thanks. So there's so much debt out there that there's nobody else to take it. I mean, that's really what's happening. And China's not buying debt like it used to from the U.S. either. They've kind of capped it off. So so that's what's called a failed auction. You auction off the debt, you don't have enough buyers, failed auction. Well, what do? Well, the Fed will just buy it onto its own balance sheet and print money to do so. So that's essentially what's happening right now.
So what's the impact of that? What does that actually mean for debt and future bond sales? Does that mean the bond market's dead?
No, not at all. But it does mean that inflation's coming. Because if you're having to print money to buy the debt that nobody else wanted, then there's more money in the system, and inflation is created.
I saw a story that part of the reason the Treasury auction failed is because there's whatever that big bank in China is called had like a cyber attack or something, was down and couldn't participate in the auction. You don't believe that?
No, I mean, no.
But so
because here's the thing: there's intermediaries out there, right? There's prop desk that will buy the paper and then resell it to people if they think that there's actual demand and earn a little bit of a spread on that.
But who do you think is sort of spreading that psyop then? Is it the government embarrassed that the auction didn't go through?
Probably, but I don't know. I mean, it could have happened, but no. I mean, there's so many prop shops that will do anything to earn an extra $1 million a spread. And if they thought that there was demand on the other side a few days later, they would have bought it. But the fact that they didn't think that there was demand on the other side and passed, it means a lot.
Okay, so if the Fed's buying the debt, and that means inflation's coming, yeah, we're heading into.
Well, it's already here.
Well, yeah, but it had come down. I think.
Well, no, it didn't come down. The rate of which inflation is accelerating has decreased.
Okay. No.
So if it goes up 12% one year and then it only goes up 3% the next year, well, that's a compounding effect.
Yes. Okay. So look, the rates change, but the rate at which it's increasing has changed. Like it always goes up.
Yeah.
It always goes up. I think it's down. Was it 4.8 in the UK today?
I've not seen.
They're celebrating that. But if that means maybe the rate at which it increases is going to go up, going into an election year where you're saying they might start dropping interest rates, that means there may be a flood of capital that becomes available. People start investing, buying, doing things. So does that just mean we're going to get even much higher inflation than last time?
Yeah, that's right. But think about it like this. It might only be 9% next year instead of 12. But if you think about it like this,
it's 9 on that 12.
What's something that cost $1 cost $1.12 the next year, and then you only got 3% increase, so now it's $1.15, and then another 9, and now you're but on a compounding basis, it's, now it's $1.25.
But you haven't had a 25% increase in your wages.
That's right. Think about it like this: a lot of people's grocery bills are about $1,000 a month right now. So what was $1,000 a month 3 years ago is going to be $250 more per month.
Whilst their mortgage payments have gone up.
That's right. Which means that, okay, where we're spending money on food and mortgage payments because you have to, and fuel for your car, which is going to continue to go up, and I've got a whole thing on that. What is there left to spend money on? Right? So when you look at CPI numbers, you're like, okay, well, that's great. CPI is not as bad as it used to be because people aren't buying clothes. So there's a discount on clothes. There's a discount on electronics. Nobody's buying flat screen TVs anymore. Well, electronics went down. Great. Used autos went down in price. Well, do you know why? Because nobody can afford it. So those are the numbers that are skewing the data. Meanwhile, food, fuel, and housing continues to go up.
Where does all the money go? Where's it all gone?
Ukraine?
But no, serious question. Where does it all go? Is this just is this just making the super rich even more super rich? Is that what does it just go? Does all this money, all this debt, eventually just find itself in the pockets of the wealthiest?
It does, and here's why. Because when inflation occurs, so some of the best correlated assets to inflation are actually equities.
Yeah.
So if you own a large portfolio of equities, it's essentially levered inflation. So you're getting rich at a much larger clip than the inflation rate. Whereas people that don't own equities, that are just trying to buy food and gas, are getting poorer because they have less money to spend things on. And then people that do own a little bit of equities, the middle class, are having to sell out of their portfolios in order to just buy necessities.
There is this kind of strange other transfer of wealth that is happening in mirroring this with Bitcoin, in that as this happens and people are being made poorer or relatively poorer, when Bitcoin reacts to this, the Bitcoiners are getting richer.
That's right.
And they have the capital then to do things. I now, if I wanted to, it's weird because you never want to sell your Bitcoin. But like, there's businesses I want to start. There's things I want to do. I could sell Bitcoin to do that. And if Bitcoin rips to 200-300K over the next few years, I'm going to have the capital to buy properties. Maybe there's distressed properties, distressed businesses.
Yeah.
Any Bitcoiner is going to be in that position. So we do. It feels like a counterbalance that's starting to build in this Bitcoin world. It's a small one.
Well, look, it's good for us as Bitcoiners who've been around for a little bit, but we're in the same position as the people that own a lot of equities, right? What about the people that would love to buy a Bitcoin that can't because they have to eat? And that's really where I'm focused, right? And that's what I'm thinking about is, okay, well, how do people get out of this cycle? Well, you can't. We as great as it is for us because we're Bitcoiners and our value of our Bitcoin's going up and in times like this, it's bad for the general economy because people can't really afford to make investments or to buy new assets or being forced to sell it off in order to just, pay for food, gas, and a mortgage. And that's what's really unfortunate. And again, I kind of go back to really the only way to solve this is to cut government spending.
Are there any conversations happening regarding cutting government spending?
No. Nobody really wants to do that.
They do discuss it. Like I say, the Conservative government did try it.
Sure.
Yeah, publicly tried it. Did some
but then but then there's some bills that are passed and they all sign up for it.
Of course.
Because they benefit personally.
So I just question, how will anything ever change? Does the whole thing have to blow up to be some kind of constitutional change?
I really don't know how things can legitimately change.
So then there's an inevitability of high inflation coming. Could the US hyperinflate?
Yes.
Do you think it will?
Yeah.
I think there's a good chance.
Is there a benefit to doing that in a very short period of time? Short, sharp shock, wipe the debt away?
Well, if you look at other governments that have experienced hyperinflation, they get into cycles where they experience hyperinflation over and over again and don't really solve their structural issues. Argentina is a good example. And it's a vicious cycle because no one really wants to solve the structural issues, especially people in power. So is it good? I don't know. You would hope it is, but I think eventually what will happen, and this is why we do this, right? Is a new neutral currency comes into play, and people say, forget that. I'm not gonna buy dollars. They're not worth anything. I'm gonna buy something that has a limited supply and is easily transferable. It's not controlled by government.
And it's so obvious right now.
Maybe.
Because I don't know about you. I don't know how much you worry about it, Steve, but...
And that's why I'm buying Dogecoin.
When I was in Colombia, when I made my film in Venezuela, I went to Colombia first. I was in Bogota, and I met this guy, a Venezuelan. It's probably a typical story. Yeah, he told me he was a professor. He'd worked his whole life, earned good money, and during the Chavez era, everything got wiped out. He said, I just got wiped out. I ended up leaving with nothing. And so I look and think, I've worked so hard my whole life. From 14 years old, having a paper round till now, I worked. Danny knows how hard I worked. And I've built things. I've built businesses. I've built stuff for my family. We have a life that I've built. And I look at it, and I can map out a scenario where it gets wiped out. If I didn't have Bitcoin, just forget the Bitcoin now. I can see a scenario where there's the economy changes in a way that, say, my bar isn't viable. Not enough people are coming through the doors. I have to close it down. And then I probably can't afford my mortgage anymore, and I lose my house. Or there is a hyperinflation event that just wipes out everything I have. I can map one out. And I look at that and I think that's fucking scary. So I spend a lot of time now thinking, how do I protect myself? How do I protect what I have? It's almost like sometimes I think it's not about wealth creation anymore, which is what we want to do. Everyone around this table, everyone listening wants to create wealth for themselves so they can live a nice life and their family can for the future. I'm spending more and more time thinking about, how do I stop myself getting wiped out? What are the scenarios where the decisions of the government wipe me out? What can I do to protect myself? And how do I share that with enough people so they understand? Because I don't think many people really understand.
Yeah, they really don't. By the way, the reason why you're thinking that way is because you're getting older.
Yeah, I know.
Because when we're in our 20s and 30s, we think about wealth creation. And when we get into our 40s and 50s, we think about wealth preservation. It's psychological.
Well, I think that's because, I'm staring down the barrel of retirement.
That's right.
And I don't know when it will be. If it'll be 5 years, 15 years, maybe I never will fully retire. But I'm starting to think the things I want to do. I want to have free time, possibly become a grandparent, spend time with the grandkids, have some holidays, and I want to have the capital to be able to do that. I don't want to lose my house. So I'm thinking, what are things I could do? Clearing off my mortgage as soon as possible would be a good idea. So if everything did go to crap, at least I've got my house, right? I've got that.
Yeah.
Do I need some gold just in case? A few years ago, I created a pot of cash and I have that hidden in a place in case I ever need it. That's lost 20% in that time.
That's right.
What a crap decision that was.
Yeah, almost 25.
It was 25. Yeah, I should have put dollars. That would have about evened out with the pound crashing. But no, I think a lot about this, and I'm thinking, how do we protect ourselves? And I keep just coming back to Bitcoin now. It makes, even though I've been doing this for 6, arguably 10 years, it just makes more and more sense now. And so I'm leading to something with this. I'm bringing it all the way back to the ETF and bringing it back to Larry Fink. If, he's a smart guy.
Very smart.
Manages a lot of money. A lot of people, a lot of institutions, individuals, rich people rely on what BlackRock does.
That's right.
And their advice. He must know what's coming and what's happening. He must fully understand exactly what we're saying now in terms of the Ponzi of US debt.
Yeah.
And so before I was like, is Larry Fink doing this because he thinks, I can just make money off this ETF because we're BlackRock? Or does he himself think, holy shit, here's a problem, and this Bitcoin's actually a solution? Does he actually get it?
I think he does actually get it. And I've got a lot of friends at BlackRock that I've known over the years, and they get it too. And they've been wanting to do something in the space for a long time. And this is finally the opportunity for them to do so. But I'm also going to say this, based on his public comments, I do believe that he gets it and he sees something coming. But when you manage enough money, the tail often wags the dog. And we used to always say this about Bill Gross, right? When I was in the bond world, it's like, eventually PIMCO is the market, and anything that they do moves the market. So no matter what he says, he's going to be right because he is the market. When it comes to so same thing with Larry Fink. I think he gets it. I think he sees where the direction that the world is going, but the fact that he's now involved is making that thought real, if that makes sense.
I did want to ask you a structural question, actually, just to correct some things from some questions we've had over email, and I think some things people are getting wrong online. Some people have been saying that the price of Bitcoin's been going up, or that's BlackRock are loading up ready for the ETF, but that's not structurally how it works, right?
No, that's not how it works.
Yeah, how will they buy enough? How will there be enough Bitcoin for them to buy when that actually goes live? Well, picking up a few $1 billion worth of Bitcoin can't be easy.
No, I think it's pretty easy. I mean, just from trading it. I mean, a lot of people think, oh yeah, it's going to be hard to pick that up, but there's always sellers at a price, right? So if that means that the price of Bitcoin moves in order to accommodate the amount of US dollar notional that needs to buy Bitcoin, then the price moves. But and I believe that will happen. So that's part of my, I said outside of a Bitcoin spot ETF, I think a Bitcoin spot ETF could double the market price.
And so when people are buying the shares, are they buying the Bitcoin at the same time? Can there be a gap in the timing between someone buying shares and then buying the Bitcoin? Do then they have to reprice the shares that you get? Like, I don't understand how that works.
Yeah, so there's two things that happen. So as people are buying into an ETF, if there's more buyers than sellers, then they create more units of the ETF, which means they have to go out and buy more Bitcoin. And usually you get your creates, that's what it's called in the ETF world, at the end of the day at 4 o'clock or throughout the day sometimes as well. And then you've got until really the time that market opens the next day to buy the Bitcoin. So that's really how it's going to work. There's not a whole lot though of front loading and front running ahead of that. I mean, a lot of retail investors are going to front run because like, okay, well the price is going to go up. I'm going to start buying, but you're not going to see a ton of. I mean, I wouldn't expect more than $1 billion worth of pre-buying to be ready for an ETF. So, and that's for the ETF itself. I just want to make clear, not people that are speculating, but for the ETF itself. I don't see more than $1 billion.
If the government can print money as easily as they can, it would make sense for them to print $1 trillion and buy $1 trillion of Bitcoin and sit on their hands.
Yes. It'd make a lot of sense.
It's a really logical decision because them buying, they could buy and then announce and instantly 10x their value. That could solve the government debt issue.
It could. I mean, in the same way that in the past, governments have bought a lot of gold to back their currencies. So the U.S. got off the gold standard long ago, but other countries, what they do when to back their currency so that so it doesn't collapse, is they buy things like U.S. treasuries, debt from other countries, as well as gold. And they say, okay, well, so here's the value backing this. That practice largely went away during the recession, the Great Recession. And so a lot of governments don't use gold to back their debt much anymore. But I am kind of hearing rumors that a lot of countries are looking at Bitcoin to back their currency reserves. But we'll see.
There could be a supply shock then. If countries are wanting to buy it, ETFs are wanting to buy it, you could find a time. Like, if you're buying it, can you talk about how your ETF would buy it? Or was that secret?
Yeah, I can talk about I can talk about that generically.
Do you have like relationships with Coinbase or miners or OTC desks? How does it work?
I mean, look, the way that we would typically, if an ETF, Bitcoin spot ETF were to launch, what we would do is we would simply, we would simply trade with various sources, whether, exchange or OTC or whoever. And when we get orders in, we would simply buy the Bitcoin from them. And that's really how it would work. Same people. I mean, we run funds today, and we've got a lot of different trading desks that we work with, and we would probably work with the same ones.
With the BlackRock ETF, you have to be like an authorized participant or whatever it's called to actually create or redeem the shares. So you can't, if you own that ETF, you can't actually redeem it for Bitcoin yourself. Does your ETF application work the same way, or can you actually redeem for physical?
Yeah, same. Yeah, ours works just like BlackRock.
Okay.
Will there be any differences between these ETFs?
No.
Are there any so there's none that you can redeem for physical Bitcoin?
Well, it all depends. Well, I pause because we don't know what the final verdict will be as we're working with regulators of how they want it to be done. So we don't. I'm just going to say we don't know yet. But likely it would be, you take in cash, the APs buy Bitcoin, they deposit Bitcoin into the ETF, and then when there's redemptions, it goes through the APs and they sell for cash. That's likely how it's going to work, but we don't know.
Do you think these ETFs, do you think there's a potential that the SEC likes them because essentially the ownership is consolidated into kind of like centralized custodians, and it's not people taking it off into their own wallets and out of the purview of government?
I actually think that most people in the SEC are neutral.
Oh, really?
Yeah. And when I say that, it's okay, when bond ETFs or equity ETFs are created, as long as there's a sufficient market and, the issuer isn't a criminal and proper disclosures are in, it works. I think what makes Bitcoin unique is it is a unique asset class. And you asked me the question earlier about, other ETFs that have taken time. I remember about 10 years ago, I was working on an asset-backed securities ETF. And because of the CLO and the credit crisis that happened in 2008, asset-backed securities was sort of a bad word, but we weren't dealing in the mortgage-backed securities. We were dealing in more hard assets. But it is such a niche market that it took us, I think, 3 years to get an ETF approved that held asset-backed securities. When I say asset-backed securities, I mean like aircraft securitization deals and cell phones and things like that, right? Like hard industrial assets. So, but yeah, it was a niche class, so it took a very long time. Now that was a niche subsector of debt. Bitcoin is something entirely different. It doesn't fit in any category. Some people say, oh, it's a commodity, or it's a currency, and nobody's really defined what it is in the government. So that's part of the problem. It's like, okay, where does this fit in? Is it a commodity like oil or gold? Is it a currency like euros and pound sterling? What is it?
It feels more commodity to me.
Well, I think that's how they're defining it.
Yeah.
But I see it as a currency. I don't see it as a commodity.
Well, what do you see gold as?
I see gold as a commodity. I don't see it as a currency anymore. It used to be a currency. I think gold status as a currency is long gone.
Guess it can just be both.
It could be both. But that's the problem. I mean, even us discussing this, we can't come up with an answer. So how do you think the SEC is thinking about this? They're like, well, what box does this fit in? It's a brand new box. So there's a lot we have to do to make sure that the proper disclosures are in place in order for us to launch something that's in a brand new box.
Do people actually read the disclosures, or are they like terms and conditions on a website?
No.
What a waste of time. But yeah, I just think it's so logical for the government to buy Bitcoin.
I agree.
Bukele is going to look like a genius about mid to end 2025. I don't know how much Bitcoin they've bought now.
I'm not sure either.
But
That'd be interesting.
He bought a lot for them.
Yeah.
Even if it's 100 million, it might be 2 to 3 billion for him at that point. If it's $500 million, you got it?
It says they own 2,500 Bitcoin.
Wow.
Yeah.
That's a lot for a tiny country.
Yeah.
He's going to look like a genius at the end of next year.
And so what's that? The quick math, I'm guessing, is 100,000 make that 2.5 billion? Or does that make that 250 million?
No, billion.
2.5 billion.
Yeah.
And what's their GDP? I should know this off the top of my head as a former.
GDP is 28 billion.
So that's about 10% of it.
That was 2021.
10% of GDP.
Wow. Bulgaria have a load of Bitcoin too, don't they?
Don't the police have that?
Well,
Did they confiscate 200,000 Bitcoin?
It was confiscated, yeah.
Oh, is this the guy that got arrested?
Yeah, 215,000 Bitcoin.
Who has that? The government or the police?
Is there a difference?
Well, I mean, is it in the government's treasury?
Oh, I wouldn't imagine they've seized it and put it in their treasury. That doesn't seem like an okay thing to do.
I guess the USG will be regretting auctioning off the Silk Road funds.
Yeah.
Wow.
To Tim Draper. Tim, you still owe me 3 Bitcoin.
Yeah, I'm not sure who owns it. I'll have a proper look later.
I'm surprised we haven't had that second country move yet. I assume Argentina will if Malay wins the election, but I'm surprised we haven't. Well, actually, there's a reason if you're stacking to actually not say anything.
That's right.
Yeah.
Well, we know that like Bhutan are mining Bitcoin, Saudi are most likely mining Bitcoin. I don't think there's been an official announcement. Like I think that there's going to be pretty wild the next few years.
I mean, UAE has to own a ton of Bitcoin.
Yeah, surely.
Well, listen, gonna buy some more Bitcoin.
I just hope we have a great time while we're in Dallas together.
Well, listen,
or Fort Worth.
Fort Worth, yeah. Well, listen, if you want to make some money, buy Danny a couple of beers, go and play some pool.
Well, we're going to Billy Bob's or wherever it is tonight.
Billy Bob's.
Billy Bob's, the largest bar in Texas.
Well, it's officially called the largest honky tonk.
Honky tonk.
We can have a bet on who can stay on the
Honky
mechanic
Tonk.
bull the longest.
They're the bars that you have in Nashville where they play the music.
I think they're considered honky tonks as well.
Yeah. All right. We'll go to the honky tonk.
I mean, we stood in line in front of a honky tonk once and ended up not going in.
Did we? Which one was that?
Kid Rocks, right?
Yes, we did.
They wouldn't accept your British ID.
No, I didn't have I forgot my passport.
That's what it was.
So I was showing them a photo and they wouldn't accept it. It's so weird out here like that.
I'm so glad we didn't get in.
Don't know, man. I think it would have been fun. All right, Steve, good to see you. Do you want to send anyone anywhere?
Yeah, I guess you can follow me on Twitter, Stephen McClurg.
Start your trading group. I'll subscribe. All right, Steve, good to see you, man. Thanks for
Good to
coming in.
see you.